All right, well, let's get to our stock of the day. Now, it's in, well, one of those sensitive sectors, particularly as far as interest rates are concerned, given what's going on at a macro level. It is the retailer Myer. Its first half sales were up over 24% after a record Black Friday. It now says that sales are up 1.7% of the first 7 weeks of the second half, but warns of volatility in the macro environment, saying the integration of Myer apparel brands is providing synergies, but these sales have been underperforming in the past couple of weeks, while Just Jeans has been overperforming, and the company has reaffirmed its cost of doing business at around 29% of total sales. Investors will get an interim dividend of 1.5 cents a share. And now, Rudi, let's start with you. A, do you want to be in retail at the moment? And B, would you want to be in Myer? And do you ever go into a Myer store?
I used to, sometimes, because they had bargains. I mean, let me take a macro picture here first. I mean, that's okay, but that's obviously backward looking, and you can tell from the market response that on the day when the market is bouncing, the share price is not going higher. So that's not how enthusiastic we are about these numbers, even though management, of course, is. If I look at the market now, and I'm picking up where we left earlier, I think at least half, if not more, of this market is now at bargain basement value. I mean, there are degrees of differences, but the market is at large now very well underpriced, even though you might not see that at the index level. So now it comes down to, what do you want as an investor? Do you want a quick profit? Because a lot of those stocks, they will jump because they've all been sold down. Or are you now going to concentrate on the better quality companies that might give you returns for the next 5, maybe 10 years? These are not quite the same. I mean, and the second group may not necessarily bounce as hard in the short term as the first group. Right? So I'm personally, I'd be more than happy to hold stocks for the next decade if I can. So Myer would be not on my list. I mean, I'm just not interested. My favorite observation, that's obviously before they bought some assets from Premier. My favorite observation was that their sales had peaked in the mid-90s. Just think about this for a while. Maximum peak sales in the mid-90s, and we're now in 2026. Maybe as a long-term investor, you want to buy into companies whose business goes up over time, and not the one that goes sideways at best. And maybe I should leave it with that question.
Well, also begs the question.
There are better retailers out there. You don't have to buy everything just because they went down. I would personally go for better retailers, better companies, better structured, uptrends operationally, even though that may not necessarily be visible on a day-to-day share price move.
I mean, Andrew, I was going to ask the question, does the department store model have a future?
Well, certainly the numbers for the last 20 years says it's a dying one, if the future is there at all. I think it was only a few weeks ago on Wealthy and Wise with Nadine that we christened Myer potentially a dog dressed up as a unicorn. I don't think that necessarily has changed, though I do think that management has done a wonderful job. You know, there's that lovely Buffett quote, when a business with a history or reputation for poor economics meets a manager with a reputation for great results, the business's reputation usually wins. And at least in this half, Olivia Wirth and the team seem to have won. Because if their numbers continue, as in the second half looks like the first, they've managed to get Myer to the point where this anemic performance is now on a PE of 4. And a PE of 4 says either the market really doesn't believe this can continue, or this is going to be the bargain of the century. I think, unfortunately, with the history of Myer, it's more likely that the performance won't continue than that the market is wrong here. It's a sell for me, and I think our Teaminvest members on principle. There'd be no point owning a retailer with no moats that's going backwards. But maybe Olivia can turn it around. The joy, of course, of being an investor is you can watch that from the sidelines rather than having to take the constant fear and headache of being in it and watching.
Yes, your question would be, why would you be in it in the first place? Rudi, I'm assuming that's a sell then from you as well.
Well, here's the thing. I mean, there is a class of investor out there who will tell all three of us that we are wrong because everything has a price. Yeah? And no doubt, those investors are looking at Myer, they might have looked at Myer, and they're probably buying today or they're buying yesterday or last week. Yeah? Because as I said earlier, when the share price gets cheap enough, it'll bounce at some stage. And maybe if the PE goes to 10, that's a big gain you're going to get. Yeah? So those investors will say, we're wrong. Man, you buy them because they are so dirt cheap. Yeah?
But you just said you're
But
a 10-year
exactly,
investor at least,
exactly.
aren't you? So
I
it's
look
work
for
for you.
I look for more than just that bounce. And
Yep.
so for me, it's a barge pole with a wide circle.
Yeah. Okay. All right. So let's take that as a sell and an avoid then, as far as our stock of the day is concerned.